Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade Nightly video for the 15th of March here in 2022. And let's pick it up with the Fed announcement, because that's going to be the driving force, most likely, all things being equal, on Wednesday, which is tomorrow. And that's going to be taking place at 11 o'clock Pacific. And that is our Fed day. So let's take a look. You can always go into the Market Watch tab here in thinkorswim. Take a look at all the CPI that's going to come out too. That is not to be outdone or overshadowed. CPI is going to take place in Canada, or retail sales that will take place here in the US. So a lot of different news events are going to take place Wednesday, and it could be a very volatile session. But let's talk about the Fed in the beginning of the video. So what will they do? Fed will raise rates, right? Raise their overnight interest rate. We're expecting it to be about a 0.25 basis point hike. It's time to lift. Call it liftoff. But is there a chance they go up to 50? Or is there a chance they do nothing at all? I would think about this, how I'm approaching it as like a bell curve. And I do a lot of my trades and work with bell curves. But the highest probability is that they actually do the 25 basis point raise. Lower, but not zero, probability that they just keep rates the same, and a little bit of a probably similar low probability that they'll push the rates up, or 50 basis points. So what is the thought process if that does occur? The market, generally speaking, has priced in, amidst all the other headlines in inflation and Ukraine, Russia, and of course the Fed itself, when the market's priced in as best they can a 25-point hike. So I'm thinking if there is no hike, that could be a bullish surge. Again, low probability, but a high impact. To be a bullish type of play if we get a zero. What if we get a 50 basis point hike? Might see the market crunch even lower. Now, those are the extremes. Probably going to see something not surprising, because the Fed in general does a good job of communicating what they are doing with policy. Now, the Fed rate hike is not the only news. We will hear discussion from Jay Powell, and of course any interview or any mention about economic conditions, inflation, and other key buzzwords in the Fed. But they are important to note, and even if you don't read the Fed statement, the market will react to them, and we'll all be in the movement of the market post-Fed announcement. So, and that'll be Wednesday, and of course we'll have retail sales, other important notes, other important information. What about earnings? Any major plays on the earnings front? Just taking a look. And we can do that here in our S&P 100 list. Days until earnings. Next up is Accenture, and that takes place 2 days out. Then FedEx, Nike will take place in the next week. Adobe and the others. So not a lot, not certainly as much as we've had recently on the earnings front. So we will be watching the Fed. And again, pricing in the interest rate, and there's two different functions. The Treasury Yield, we keep discussing this because it is important to note. So that is, speaking of notes, the 10-year Treasury note yield, and that is pushed above the 2% barrier. When it says 20, it actually means 2.0, and down here at 10, that is 1% in the 10-year Treasury yield. And the way we look at that would be here in thinkorswim with TNX. So again, market pricing it in. Markets don't move on the announcements. They move well in advance, especially something as telegraphed as the Federal Reserve and their policy announcements. So the market, or at least the yield, has been moving up in response to inflation as a portion. And of course, the Fed statement that they will be raising rates in 2022, and we're looking for that to happen March 16th. March 16th seemed like it was a far away play, but that is tomorrow. So the market is anticipating that. And that's similarly, if we look at the ZN, which is our ZN, 10-year Treasury note, that sent the market lower. So Treasury notes, or the tradable bond product, ZB, or if you look at IEF, which is a tradable ETF, exchange traded product, well, that's going to be down at the lows of 2022. At the same time, the yield's at the high, and that's part of the equation. Bonds coming off, yields going up. Direct inverse relationship. You might actually trade, and I do prefer to trade the TLT which is the further dated 20 or so Treasury note. And that is similarly playing off the downside. That's going to be something we'll watch carefully in tomorrow's session. Remember, if the Fed raises rates, that is bearish for the bond price, but similarly bullish for the notes and the price, the yield, and the interest rate. So that'll be the play at that point. Other plays while we're looking at it, crude oil got its pullback, its sharp surprise, double whammy about inflation on one hand and Russia, Ukraine, and the other components taking place in that area and the embargoes. But the crude oil price peaked, as of this video, at $130 per barrel and now trades under 100. That is a key level to focus on in the future. And of course, after the Fed. Gold did something similar. And that's the inflation. That's just a breakout. That's risk on, or at least risk off, safety plays. And gold pierced above the 2,000 per ounce and peaked above 2,050 and is now back. Just like oil, same logic. Almost like popcorn. Popcorn up, popcorn down. Or jump up, jump down. And gold now trades at that 1,900 level. And the equity market. Nasdaq did make its new low. Its focal point after the Fed's going to be 13,000. So no major surprise there. The Nasdaq index has rallied, peaked about the 1,700 spot, and then downtrended its way with lower lows, lower highs. So 1,300 or 13,000, that's going to be the key focal point for any sustained bounce or rally. And if that does not materialize, we will have to scale the chart a little bit lower. You can do that as well on the weekly chart when you're planning out levels of potential drop zones. So failing under 13,000 does take it down, maybe to this 11,000. That's just the Nasdaq. And while we're on the bigger picture, here's the S&P, which has gotten its downtrend from 4,800, now trades 4,200. So that is pulled lower, and that's the steepest pullback mainly since the beginning, or at least the end, of the rally, that pandemic lockdown. And that was about March of 2020. And that up rally ended 4,800. Key level again, 4,200. Beneath that, drop zone. And that will be the play if additional bearish action takes these trends lower. It's the same levels of play off in the Dow. And of course, the Russell, we'll take a peek at the Russell, which is RTY. And see that it had a strong resistance, or at least a strong sell side or a volatility box, called it a rectangle, at about 2,400. And the Russell, its key focal point, 1950, or about, just for simple terms, 1900. They seem like simple numbers, and they are, but a lot of traders will make adjustments. They may have stops. They may be willing to take the risk. But if indexes and index products or ETFs or similar plays, they start breaking support levels, well, they might, you might, we all might decide to be much more defensive than we've already been. So that could just slide the market into the future months off that cliff. And yes, that is a possibility. And yes, it's a real component to hedge against or take long positions off, whatever needs to be done. In the event that the market slides under 42, then 41, losing 4,000, that's really going to push it down to 3,400 or the like. So we will be watching the news. We'll be watching, just again, referencing the retail sales, all other components that come into this, and other CPIs, not just ours. Ours came in hotter than expected, higher than expected, and that's why the Fed is pressured to raise the rates. But if you are curious, you can always see, again, which economic or economy events are taking place. The key ones are going to be here, and throughout the rest of the week, retail sales and all the other components play. But the big one is going to be the Federal Reserve and their announcement, what they say about the Fed funds rate and what they say about the economy and the state of inflation. Any clues from that could send the market up or down, and we'll need to be positioned, or at least wait for, if you are not deeply positioned, or if not fully positioned in your portfolio, then wait for that to take place and then decide in Thursday or Friday or into next week. So finishing up the video, we'll just take a quick look at the stocks that made new 52-week highs anything jumping out at us. Berkshire Hathaway, but that is an earnings play. AbbVie Labs, Bristol Myers Squibb, Travelers, and some others that made new 52-week highs. What about those making lows? 8 of them, not a lot on the market cap side. And here are the ones that made new 52-week lows. Wynn Resorts and some others. So always be careful, safe. Go back to this market watch. Keep look on the Econo Day events, or at least the calendar, and be careful, safe, and protected, as always. This is Corey Rosenblum with tonight's Theo video update for March 15th, 2022.